Hello friends, welcome back to my channel Intraday Trade. My name is Robin and let's do our analysis for Nifty and Bank Nifty for tomorrow. So I have already posted a video on Nifty and Bank Nifty weekly review. If you haven't watched it, please go and watch it. And also I have done an analysis on a particular stock. So I posted a video last night. Please do watch that also. So even if you're not investing, definitely watch it, because that will give you an idea how do you analyze a particular stock for a short term or a long term investment. Okay, so let's begin the analysis. So the first thing, right now we are looking at Nifty daily time frame. So what do we see on a daily time frame is definitely Nifty is continuously forming lower highs and lower lows, and that trend is still continuing, and at present we do not see any halt to that particular trend. Okay, and currently if we see on Friday, so Nifty has formed a bearish engulfing kind of a pattern. Okay, so if you look at the previous candle, that was a small doji kind of a candle or a spinning top, you can say, and it was completely engulfed from top to the bottom with a bear candle. So this clearly says that the trend is still on the downside and the selling pressure continues. So let's look at Bank Nifty also on a daily time frame. Okay, so Bank Nifty is more weaker than Nifty, because Nifty at least showed some sharp bounce, but Bank Nifty is still not able to even fill the gap, which is around 35 540 area. Okay, so if it reaches that particular area is when the gap will be filled, but it did not even go till that place. Okay, so I think there's about 70-80 points gap yet to be filled. So in any chance, if you get Bank Nifty in this place around 570-600, then that's a very good place to short Bank Nifty. So we should definitely look for a reversal candle pattern, or maybe a reversal chart pattern like a double top or something to enter. And otherwise, where will the selling pressure come? So this is a simple price action technique that I'm going to tell you. So if you look at this place, okay, so we have a green candle here. Okay, so green candle always suggests buying. Okay, it could be short covering, it could be buying, or anything. But what is more significant here is we had continuous red candle and then we had a green. So definitely there would be some buyers present in this particular green candle. Okay, and they'll have their stop loss somewhere close to this candle's low, which is around 34,389. Okay, and the low of this candle is 34,687. So around about 200 points. Okay, 200-300 points SL. So whenever the candle closes below this green candle, that means the buyers had already lost their battle or lost their control, and the market may come down heavily. So always keep this in mind. So in a downtrend, whenever you see a green candle, the low of that green candle is going to act as a support, and whenever that is breached, you will immediately see a selling pressure. So if we look at this closely, just see what happened. This red candle went below this green candle, but it could not close below the green candle, and it closed on the higher side from where this green candle opened. Okay, so this place becomes very important. Likewise, if you look at here, after a red candle we had this green candle. Okay, and see the first time, so this candle also came below the low of this green candle, but it could not manage to close below it, and immediately the next day when it opened below that level, we saw a sharp fall until this place. So keep this price action point in mind. So this green candle becomes very important for us as a support. So what is that point? That is 34,687. Likewise in Nifty, so this green candle is going to be a very important point. So right now if we open flat and come down, this green candle is going to act as a support. The low of this green candle is 16,819, so 16,820. So only if we close below 16,820, say like tomorrow if we are falling, and if we give a close below 16,820, and the next day again, even if we gap up or if we open flat, and if we are continuing below 16,820, that means it is going to fall heavily. So keep these points in mind. So now let's quickly check the data and then the open interest, and let's come to a conclusion. So if you look at the data, so this is, so FIs have some future buy, so very small quantity. One main reason is their vacation, and the other reason is we are somewhere hovering towards the support. And if you look at their call sell, it is about 31,000, and put sell is about 29,000. So that means they are expecting a sideways market. Okay, so chances of premium decay is going to be higher. And if you look at pros, they have future long, and they have call by 27,000 and put by 24,000. That means even pros are expecting sideways, but they are, since they have long in both the options, they are expecting the market to be sideways with good volatility. So overall picture is market is going to trade in a range, but that range can turn up to be volatile. So this is what the participant wise OI data says. So I'm not discussing this because I think even you guys can understand this now. Let's move to the open interest chart. Okay, this is the open interest. So first, let's look at Bank Nifty. So if we check Bank Nifty, this is the point which is 35,000. So 35,000 has still some good open interest on both call and put. So 35,000 looks more like a straddle. Okay, short straddle. So looks like people have created short straddle here, and roughly the premium of this short straddle was around 750. So 700 to 750 points. So if we consider 700, then that means people are expecting a range of 34,300 to 35,700. So this is the range people have planned. Okay, but definitely selling pressure is definitely there because the put side open interest is less and the call side open interest is more. Okay, so this gives us an indication that there is still some selling pressure and the chances of going down is more. But since people have that mindset that FIs are on leave, and market may move sideways most of the time, so people tend to create sideways. And also if you look at the FIs position, looks like they might have created this 35,000 straddle because they have call and put both in sell. And the next thing is so we'll keep this range in mind, 34,300 to 35,700. Okay, now let's quickly check Nifty. Yeah, if you look at Nifty, the open interest is a little different here. So 17,000 has more open interest on the put side. That means people are still believing that Nifty would respect 17,000. because I think on the Friday we went below 17,000, but however we managed to close above 17,000. So tomorrow it is going to be important if we are holding 17,000 or not, because if we do not hold, then these put writers would start covering their position, and at least we can see another 200 250 point fall. And if you look at the call side, closer to this place, we do not see much of an open interest on the call side. So definitely, the reason for this is people are not, since FIs are not present or they are not much active, people would not like to take overnight risk. Like Saturday and Sunday is a holiday, so most of them do not want to take an overnight risk. So the positions are not aggressive here. Okay, but otherwise, 17,000 is going to be a support, but since we are just close to it, see, we are right now at 17,003. So this definitely requires a lot of strength and patience, because 17,000 can be broken easily, but we have a good support at 16,500, and similarly a good resistance around 17,500 for the week. So tomorrow we'll get to see more aggressive position from the participants, so that will give us a clear picture for the coming week to decide where can we make a move. So this is on the basis of open interest. Now let's quickly look at the chart. So let's move to 15 minutes, and I'm discussing Nifty first. Okay, so if you look at Nifty, so I was talking about this level. So this is the green candle that we saw, and the low of this green candle is around 16,820. Okay, so tomorrow what we can do is, this looks like a trend line here. Okay, something like this. So if we break this trend line, then we can immediately fall until this place. So let me just see what is the level. So on the downside, it is clear, like if we see a candle closing below 17,000, that means we are going to see some selling pressure. So we'll look for put buy here, and the target should be around 16,850. 16,850. So only if we break 16,820 and close below this tomorrow, then we may see a sharp fall, because we have a lot of gaps pending here, even here. So all the gaps will be filled. Then once we break 16,820, I think we can expect a fall up to 16,600. Okay, so this should be the plan for Nifty. So in case if we open flat, and if we break this particular trend line, or even if we open somewhere here and if we break this trend line, this trend line will also give a breakdown of 17,000. So you can immediately go for a put position. And in case if we open flat and we start to move upside, then we will not buy any call option, because see, market has resistance everywhere. If you zoom out the chart, everywhere if you see, there is huge resistance. Let me just activate the lines. If I have put, oh okay, I don't have, I think I have removed it. So even if I have to mark any resistance, it is going to be simple horizontal ray. Okay, so the first thing is I'll mark this point. Okay, here's a resistance, and the second resistance is somewhere here. Okay, at this place. So 17,100, 150. Okay, that is going to be a resistance, 17,350. So we will wait for Nifty to come into a resistance area and show us some sign of a reversal, either with a candlestick pattern like a bearish engulfing, or maybe a good Marubozu bear candle, or maybe any other reversal pattern like gravestone doji or a shooting star, anything like that. So if you get to see any reversal or any chart pattern for that fact, formation of a double top, then we'll definitely look for a put buy. So right now we will not plan call options in any case, even if it moves on the higher side. Okay, but always keep in mind that for tomorrow at least we're not going to plan very big targets, because they are expecting a sideways move. So we will also not expect a very big downfall, at least for tomorrow. But the targets that we are planning, these are some decent targets market can definitely test. So this is the plan for Nifty. In case of gap down, definitely yes, we will go and buy put. But that gap down should not be more than 30-40 points. Okay, so if it's a 30-40 point gap down, you can definitely go and buy put options. Now let's quickly discuss Bank Nifty also. Yeah, so Bank Nifty also has that same trend line. So if we break this trend line, that is below 34,800. Okay, so below 34,800 we will see some selling pressure. And what should be the target? The target should be somewhere close to 34,400. Okay, we are not planning a very big target. We will plan somewhere between 34,400 to 450. This should be a target. And so a gap up opening around this place, or a flat opening, and if it breaks the trend line, we are going to take our positions. And in case of a gap up, if we get right at this resistance, okay, 35,350 to 500, we can definitely take a put here. And the same plan is for Nifty as well. And but in case if we open flat and if we start moving upside, uh, I'm not preferring a call buy here. I would rather wait for Bank Nifty to go up and take a position here, expecting the Bank Nifty to come down. And in case of gap down, say if Bank Nifty opens below 34,800, you can immediately buy a put option, or just wait for a small retracement and then buy a put option here. Okay, so I hope the plan for Nifty and Bank Nifty is clear. We have checked the data is showing sideways with volatility. So keep that in mind and take your positions based on that. It is always better if you take a sell position on the higher side rather than taking a buy position on the lower side. So thank you for watching. Let's meet in another video. Please do subscribe the channel, spread this channel to your family and friends, and thank you so much for watching. Take care. Bye bye.